It's been a hot minute since we talked about our boy Elon Musk, so I want to give you some interesting updates of what's going on with not only Elon and Twitter, aka X, but Tesla and the price action of the Tesla stock, which has been plummeting lately. Some interesting and intriguing updates to say the least. Elon Musk pressures Tesla's board for another massive payday. CEO suggests he'll build products elsewhere without a 25% stake. He sold almost 40 billion of stock in 2022 to buy Twitter. So when this all came out, obviously there's going to be a bunch of memes right away. I think one of the funniest ones I saw, Elon sells his Tesla stock to buy Twitter for 44 billion. How can I be expected to make Tesla an AI leader when I don't own enough stock? Classic meme format, but right now on more of a, I suppose, a serious note, here's Tesla. In real time, it's trading at 220 as I'm filming this. Recently, it had a failed breakout. Like we dipped all the way down here at 194, ripped to 264, fake out breakout, got above the EMA cloud, couldn't hold, broke back down below the EMA cloud, this trend line, and ever since then, obviously the selling has been accelerating. It got this downside gap fill at 225. I thought it would stop there personally, came all the way to 212. I'm kind of now watching this region of the high 200s, and obviously it's bouncing back today, but the morning was looking brutal on this particular news. Elon Musk leaned on Tesla's board to arrange another massive performance award for him after he sold a significant chunk of his stake in the company to acquire Twitter. First of all, when it's performance-based, and the way Elon's in the past have been set up, it was like legitimate performance. It wasn't these like, oh, if I perform, and then the metrics were like really easy to hit or the bar was super low to clear. No, Elon's historically, you can fact check me on this, have been really tough targets, and then he crushed them all. So like, I think the media is going to do what the media does and like somehow spin this against Elon, but I don't mind it at all. If you set extraordinarily high performance metrics for him and he hits them, I think he deserves the stock then. In one of the several posts on the topic, Musk wrote that unless he has roughly 25% voting control at Tesla, he'd prefer to build AI and robotic products elsewhere, literally threatening to take some of his potential ideas, endeavors outside of Tesla. Obviously, he wouldn't be leaving Tesla, but some of potential robotics and AI outside of Tesla. Obviously, Tesla investors would not like to hear that. And that's why Tesla potentially going down recently of maybe he does have some interesting plays up his sleeve. And if you're a Tesla investor, but he does it outside of Tesla, you wouldn't have the exposure to it. While he remains the car maker's biggest shareholder with almost 13% stake, he's cashed out almost 40 billion worth of shares in 2022 to help fund the Twitter deal. So I don't think he would have wanted to do that, but we all remember that debacle. Elon Musk wants more control of Tesla, seeks 25% voting power. Tesla and SpaceX CEO Elon Musk is angling for 25% of voting control over Tesla. He currently owns about 13% of the company's stock, so basically he's looking to double up. I am uncomfortable growing Tesla to be a leader in AI and robotics without having 25% voting control. Shareholders previously sued Musk and Tesla in Delaware, alleging that Musk's earlier 2018 pay package was excessive and the board authorizing it amounted to a breach of fiduciary duty. Once again, feel free to fact check me on this, but when you look at the performance metrics that he was basically enticed to hit, they were high. And that's why the stock ripped. So anyone invested in it benefited off of it. And then he personally benefited on it because he hit such high metrics. So I just wanted to summarize that. But here's what he actually said on the whole deal. So people are saying, hey, it's not good. And then we had this one guy who responded, this is the right take. Elon owns 411 million shares of Tesla. Is that not incentive enough for Tesla, the company, to do well for years to come? His 100 billion today turns into 1 trillion if Tesla surpasses Saudi Aramco and Apple. Why the need for another compensation plan? For the record, if the board brings forward something, I wouldn't be opposed, just confused. And I think he actually responded to this in a pretty insightful manner. I am uncomfortable growing Tesla to be a leader in AI and robotics without having 25% voting control, enough to be influential, but not so much that I can't be overturned, which would be most likely 50 or higher of voting, which doesn't always necessarily align, but he wants to be more influential, but not the guy who's like by himself fully in control. Unless that is the case, I would prefer to build products outside of Tesla. You don't seem to understand that Tesla is not one startup up, but it doesn't. Simply look at the delta between what Tesla does and what GM does. As for stock ownership itself being motivation, fidelity, and other own similar stakes as me, why don't they show up for work? I should note that Tesla's board is great. The reason for no new compensation plan is that we are still waiting for a decision in my Delaware compensation case. The trial that was held in 22, but verdict has yet to be made. I put quote unquote compensation plans in quotes because from a standpoint, this is primarily about ensuring the right amount of voting influence. So as the world's richest dude, he doesn't care about more money. It's the influence in his own company. If I have 25%, it means that I am influential, but can be overridden if twice as many shareholders vote against me versus for me. At 15% or lower, the for and against ratio to override me makes a takeover by dubious interest too easy. And he historically has had to fight with shorts in the past. He's seen this on other companies. He wants to be in control. If you read his read his biography by Walter Isaacson, he's lost control of companies that he's had a big hand in the past, and it has to do with this. So now he's just safeguarding himself. I would be fine with dual class voting structure to achieve this, but am told it is impossible to achieve post IPO in Delaware. And that's what I was talking about before, where there's like a class of like preferred stock, like super shares, where maybe he doesn't get more financial equity in the company, but he has more of a voting right. And that's what he's referring to there. So most of the time when we think about it, like a share of equity is a share of voting. That doesn't always have to be the case. And he would be fine with not even having more money, just more voting power. That's what he's going after, is the voting power to be more influential. And if you look at his past with other companies, like I said, referring to Walter Isaacson's book, there's a good reason for it because he's been burned in the past. Related to Elon, not necessarily Tesla, Elon Musk's X license for payment services in Utah. So right now we know Elon and X, like he wants to just be kind of like a one-stop shop for pretty much all apps, and that would include payments and the sending and receiving of money. So to do that in the US, he needs a money transmitter license in every single state. So congrats to the team for getting another one in Utah, another one off the list. Also related to X is some big news with Mr. Beast. Obviously with Mr. Beast, the world's premier content creator, we know his home has been kind of YouTube. He doesn't really seem to skew too far from there. And his reasoning recently when he was talking with Elon is the ad dollars on Twitter just don't make sense. $1 car versus what is that, 100 million? I'm curious how much ad revenue on a video on X would make. So I'm re-uploading this to test. We'll share ad rev next week. I don't think he just did this randomly. I'm sure there was some sort of big business agreement in the back end of like, hey, test it out. Let's see how it actually goes. I myself, as a content creator, am very, very curious to know how good his ad revenue will be, because if it's anywhere within the same league as YouTube, I think a lot of creators, as we've already seen, are going to continue to leave YouTube because people are basically just like tired of being silenced. On that note, breaking 6 million views in 1 hour on Mr. Beast's first full video on X. That's a lot. Even for him, a guy who gets like his first post, a test post on a video that a lot of people have already seen, that's pretty impressive. So it'll be interesting next week. Hopefully Mr. Beast does publicly share the numbers. But if I had to guess, I think something else is going on in the background. And with that, I mean, the crazy thing now, just speaking of alternative tech and free speech, looks like potentially some breaking news. Are you ready? One Bite Rumble takeover. Everyone knows that Dave Portnoy, well known for the One Bite pizza reviews, potentially going to Rumble. We know obviously last week some big negative news about Twitch. It seems like that's a dying platform. So right now everyone's paying attention to what's going on still at YouTube, which is clearly the leader. And then it seems as if Kick, Rumble, and X are all battling it out. And obviously there's different types of content, different types of this and that. Kick is basically just a replica of Twitch, while X, aka Twitter's thought more of it as like microblogs. And then Rumble is more pure video content, but then it obviously has the stance of like, hey, we're not just going to arbitrarily kick people off the way YouTube does. So we're in this really interesting battle of platforms, and it will be, maybe there's going to be multiple winners. I don't know. I think years down the line, it'll be interesting to see how it all shakes out. But obviously the tides are a-changing.